Welcome to Dave and Dharm Demystify, a Fintech Futures podcast, helping make sense of the world of fintech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystify.
Welcome everybody to the Dave and Dharm Demystify show, and this week we're going to demystify a company called Hyperlayer. And I have two of their C-level execs here. Welcome, guys. And let's start off with a brief introduction of yourselves first.
Well, great. Thanks, Dharmesh, for being here. We are avid fans of your podcast. We learn a lot. So it's a privilege to be here ourselves. So I'm Rob Rooney. I am the co-founder and CEO of Hyperlayer. Before I got here, I spent a quick generation at Morgan Stanley, where I ran several of the global businesses. But in the latter stages of my career, I had the great privilege of running the global tech stack, which is a big one and a complicated one and a fragmented one. And it's got some legacy stuff and some really incredibly cutting edge stuff. So that's my background.
Hi, I'm Paul. I'm co-founder and architect. I only spent 15 years at Morgan Stanley, where I met Rob back in the early 90s. Hard to believe given how young we look, right? And I used to run the financial asset back route. So I was responsible for the consumer businesses and our lending businesses. I left and set up an asset manager, which is also a private credit business, which runs to this day called AGFE. I incubated the predecessor to Hyperlayer called Hyperjar, which is a B2C consumer app, and joined with Rob when we decided we were going to do Hyperlayer a couple of years ago.
Wow. Before we get into that, I'm really intrigued by this because I've spent a bit of time in banks, but not in investment banks. I know lots of people that have had a career in investment banks and they retired early, right? What made you go into having a very successful career, clearly, into actually wanting to do a startup? I mean, it is hard work, right?
It is really hard work. As you may know, investment banking is hard work as well. Also, though, I think it's important to note that maybe a lot of your listeners don't know. If I asked you to name the largest wealth manager in the world, it's Morgan Stanley. So Morgan Stanley is long, not just an investment bank anymore. But, I think Paul and I share a super high level of curiosity. We're super ambitious. We love doing things that change outcomes. And I think the origin story of our company is based on our deep experience as operators. And on my side, I was a big user of technology as a markets person, mostly. But really in the latter stages, Morgan Stanley, if you're familiar with it, has lots of cores, lots of legacy fragmented infrastructure. But you might remember in 2008, Morgan Stanley acquired Smith Barney, which brought a lot of additional technology. In 2020, Morgan Stanley acquired E-Trade, which brought a lot more sets of cores and legacy technology. So in the last several years of my career, I faced the challenge that many people on your podcast talk about and are trying to address is how do incumbent financial institutions consolidate and modernize their tech stack? And I concluded there were certain ways to do it and certain ways not to do it. My former partner and dear friend, Paul, had invented in Hyperjar an incredibly powerful way to do it. So I just couldn't resist retiring from Morgan Stanley and helping incumbent banks transform. That's what we do.
Yeah, I think there was also, going to my experience at the bank, when I started from the early 90s, there was a massive ramp up in innovation in investment banking. And there was a huge amount of some of the challenges I think people are facing today, all the way back when all of a sudden there was a big explosion in creativity and structuring. And I think there are a lot of parallels between that kind of big phase that we went through in the 90s and 2000s in investment banking right now, where the innovation curve is going absolutely straight up. And it means that there's an awful lot of change required in how things are kind of put together in banking stacks, which bluntly have been fairly static for decades.
But look, let's face it, guys. I've been in the space too, and there are so many vendors in there. Do we really need another one? I mean, what do you see as that you're doing differently compared to the other vendors that, that banks actually need?
So I'll kick that off, Dharmesh, and it's a terrific question. But my Morgan Stanley experience is that there wasn't a vendor solving the problem. And if we go back to your old space, if I can, including one of your more recent spaces, take the core problem Morgan Stanley had, the core problem Morgan Stanley had. As Morgan Stanley doesn't have a core, Morgan Stanley probably has 20 of them. And Morgan Stanley has cores in banking and cores in broker-dealer and all kinds of stuff. So this whole idea of rip and replace your core infrastructure is frankly, Dharmesh, as I'm sure you know, impossible at an incumbent financial institution of any size. So firstly, the vast majority of vendors in this space are trying to convince banks to rip and replace their cores or their core infrastructure. And I listened to one of your podcasts recently, which was quite right. It said the recently modern cores are struggling to scale. And even if you implement them, you're fixing a single core. Well, like I said, Morgan Stanley has 20 of them, right? So we've effectively engineered a solution which lets the ledger be the ledger, that is core agnostic, has decided that if you're looking for a product innovation and programmability of financial services, the problem is not in your core infrastructure. And we profoundly believe that the solution is not in your core infrastructure. So my partner over here invented a fully decoupled, core agnostic programmability solution that we have not seen anywhere else, Dharmesh.
Yeah, I mean, look, we built a Hyperjar B2C app, which we launched back in 2019. And we were a client. We looked at every single solution on the market. We looked at every single banking service business. We looked at everyone who's saying we couldn't find anything which would give us what we wanted. We reviewed everybody. So in a sense, the predecessor company, we built it because it wasn't there, right? I think when I look at it, people either look at the core, which is too hot to touch, or the app, which is too cold. And what they don't do is realize that you have to build a proper, thick, solid Goldilocks layer in between the app and the core. And a lot of the innovation in digital wallets and smart accounts has been in the app, and it's been fantastic. But at a certain point, you need to actually affect the product. You do need to sit in the middle. You do need to do things like interrupt the auth. You do need to put a huge amount of complexity in. You do need to do virtualized ledgers. You want to do social sharing, devolve spend. These things can't be done in the app. And at the level of innovation which everyone wants, touching the core to do that is foolish. So, yeah, there's lots of people who say they do what we do. Do they? Let's see.
I mean, look, I do love the story. There are people out there, I guess, that have built kind of software companies where they think they can fix a problem better than somebody else. But the stories that I love are the ones where the founders actually had a problem trying to do something else, be a customer of the problem in effect, right? So it's kind of pretty acute. But I guess the other question I have is, look, you're solving a problem which allows banks to, let's say, innovate on products faster, right? Because their legacy isn't as flexible and it's difficult to make changes, etc. But quite frankly, with banks, I don't really see them innovating products. Why is that the case? I mean, the last thing that I've seen is really, I guess, the offset mortgage, maybe more recently, buy now, pay later. Everything else is it's a different bundle, or it's a rate change or a fee differentiator, but that's about it. I mean, can there not be more innovation? And what's the constraints that you see that you can solve?
Maybe I'll ask you a question if I can, or you are making a statement about incumbent banks. Do you put the neobanks in the same category?
Yeah.
Yeah, we do too. So Paul, why don't you talk about the evolution from our perspective?
I think some of it is, I think there's a requirement to change the underlying technology stack quite dramatically to allow for the next phase of products to actually occur. So I'll give an example of a product I love, and I come from small business lending. I've been in small business lending for 30 plus years. A lot of innovation in small business lending over the last sort of 20 years has been about the fact that there's no longer tangible assets. You have to do data-driven lending. It's all been about input control. One of the obvious evolutions of lending is output control, lending to someone, hypothecation for a specific purpose. I'm going to lend someone in a guitar shop some money which can only be spent on guitars, right? That does involve having a really long, hard look at the banking rails and how to lend in smart wallets, which does involve output-based controls at a fine level of resolution, which frankly, the old auth process or batch process simply cannot do, right? So you can talk about this all you like, but if your tech stack can't do it, you're expecting a single department in a large bank to go upstairs and say, can you please upgrade the entire infrastructure so I can do some better SME lending, right? So part of the problem for banks is you've got all of these small departments, none of which have got the clout or the budget in and of themselves to go and ask for a complete repair of the entire current account bank stack, okay? Kind of as simple as that. I mean, trade finance is another area I know a lot about. If you talk to people in trade finance, they've been talking about the stuff and how they'd like to do better stuff with clever accounts or routed inbound payments for decades, but they don't have the stick. So on some level, I think one of the things that's very exciting about 2026 is I think the requirement for the upgrade is now overwhelming because of AI. And I think we're going to see a massive slew of product innovation coming out as these upgrades happen. I can tell from listening to you as well. Everybody is focused on this now. I think it's going to be a really fun time for the next couple of years.
Yeah, I mean, I certainly hope so, because I think the space has kind of lacked the innovation, to be fair. I mean, all the innovation has been really in customer experience. And to be fair, I mean, when everyone jumped on the bandwagon of customer experience, my view was that, look, this will be copyable within 18 months. So it's not a differentiator. It's certainly not a long-term differentiator. So I wonder, on the product side of things, do you think that banks or bankers are so ingrained with the limitations of their current system that they don't imagine products that break free of those limitations? Do you understand what I mean? It's like, I can only see the world this far because that's what I've been constrained to. But if they didn't have it.
Yeah, it's such a terrific observation. I must say, we start every meeting. So we're an odd company, Dharmesh. We're not kids as far as young starters. We've been in the business for a really long time. You know, our first 3 customers are all in the top 10 of the global banks on earth, right? So we have giant tier 1 customers live with our product. And we generally start with the business owners. And the first statement we make to the business owners is, you need to erase from your brain everything you've been told for the last 20 years of why you can't have what you want. And you have to start from first principles and say, on an unconstrained basis, if I could do anything, what is it that I would want? And that's really the starting point. And I think we find ourselves in the middle of a couple of giant trends, some of which you talk about a lot on your show, one of which I haven't heard you really address very much, which I think in many respects is the most fundamental to a bank business owner. And that's the convergence of financial services, really. Every consumer bank wants to grab more wealth management business. Every wealth manager wants to grab more everyday banking business. Everybody wants a better loyalty and rewards capability, not just to give you cash back, but to drive a much more embedded offering to their SMEs and their corporate customers. So the convergence of financial services, we think, is a giant trend that we're in the middle of, because we sit across these ledgers. We allow for programmability across accounts and stores of value in all respects. And these are business outcomes that we're looking for. And I think that's really the giant change, is if you can go to a business owner and you can explain to them that with a smart account, a programmable account capability where all stores of value in the ecosystem themselves are programmable, then you can spin up innovation that you'd never dreamed of without having to go into the core technology stack and ask your engineers to go to work. And you've had some guests on this show that I think are doing some terrific work in that regard. One of them I know you're close to is a fascinating company that they're working on. But one of the things I would say is, you've got to have their ledger to do what they do. And I'd say that our objective is to get to most of the 30,000 banks in the world. Most of them have ledgers and core infrastructure. And some of them will go down the route of replacing their core infrastructure, and many won't. And we're well placed, I think, to address the needs of those who either won't or can't.
You mentioned programmability, and that my ears pricked up then. And is that using smart contracts? Are you based around blockchain? Tell us a bit more about the tech.
So I'm afraid, as an old technologist, I'm fairly skeptical about the use of blockchain in certain ways. It's very good for certain things, and not for other things. So in a sense, blockchain is contracts embedded in the ledger, which is exactly part of the problem, right? We're trying to sit above it. So do we have very, very heavy rules-based engine? Yes. Is it running on blockchain? No. Can we do an implementation on blockchain? Yes, if required, but I see it as a technology platform rather than the question in and of itself. So I want to take my account. I want to cut it into 50 pieces. I want to share 5 of those with you and Rob when we go to the pub. I want to make my Marks and Spencer's money come out of one of these things. I want AI to be spent out to one of them, but only before 10 p.m. on Tuesday. These are all rules, right? And as Rob said, these rules have to span ledgers. And so I get blockchain. I think it's all very, very interesting. I think the honest answer is smart contracts or programmability should have been a thing 10 years ago, but everyone's waiting for it to be blockchain, right? So if you read all the stuff on CBDC and all of these ledgers, they will talk about the implementation things. And on page 60 of the Bank of England, it says, and one day we'll do smart contracts. We're like, why don't we do them right now? right? I mean, who gives a just make it programmable? We'll deal with the blockchain a bit later when it's not incredibly expensive and slow, right? So that's a long way of saying no.
We're trying to deal with there are 30,000 banks in the world and 7 billion people using them. I think we're way less than 0.5% of all the transactions in the world today, both in number and in volume, occur on blockchains with digital assets. 99.5% of transactions today occur on traditional ledgers and traditional stores of value. And while I'm a big believer in blockchain and digital assets and tokenization and all this stuff, it's got a path to flow, and the world needs a bridge from at least traditional ledgers and stores of value to a future state. And where we run into a problem when we talk about programmable accounts and programmable money is everybody thinks blockchain. And I think Paul's clear point that as soon as you tie programmability to a specific ledger framework or a specific ledger, then for us, you've lost us because you've just discounted 99% of users as eligible for your solution.
I also think programmability is really, really complex. By the way, I'm a huge fan of tokenization because I'm replacing ancient payment rails. But the idea that you can embed the complexity required to do a massive agentic piece of fraud analysis in a token, well, I'm waiting to see it, right? You're always going to be it's very good for things like escrow, right? If you look at all the use cases, it's like, here's some money, 4 people have to sign off on it, and then it can be used to spend here. Great. Okay, so it's great at putting lock gates on. But complex rule matching, I'm looking to see an example, right?
Yeah, I mean, I think one of the things that you're saying is that, and this is right, that you shouldn't have to worry about the underlying technology. So as long as you get the programmability, then who cares what the technology is underneath? For some people, it might be blockchain. For other people, it's something else. In your case, it's something else. But the point is that you're giving complete flexibility. And again, because I've been, I guess, on the inside and a customer, and I've spoken to so many vendors, and I'm known for pretty much being very straight about my views. There are kind of almost like two camps, right? You get the rules engines, which are usable by business people and give a great amount of flexibility, but not ultimately flexible because the rules limit the amount that the business user can do. Or you get like the coding engines, which essentially require somebody to write code and then to manage the code. Where do you sit and how do you solve the two different kind of problems, complete flexibility and not having to manage code as such?
It's a really good question. So the wanting to write code thing, I mean, I think it's too far one way again, right? I mean, it's a bit like me saying, you want a video game, and I hand over a computer and say, there you go, build your own game, right? As someone who was in video games professionally as a coder a long, long, long time ago, what evolved was the concept of a game engine. So if you look at Fortnite or Unreal, you've got a games engine, it's got all of the physics in, it's incredibly good on the basic structure, but it does allow you to build your space game or your sword and sorcery game or anything you desire. So getting that line is not a Goldilocks point. How do you get the line where you've got a base engine which is sufficiently robust? You're not just giving someone a coding framework, but it's sufficiently flexible. You can do whatever you want. And I think it's part of our special sauce, but I think we spent the last couple of years trying to strike that balance as well as we possibly can, the separation of physics and chemistry in terms of product. I'd also say, it comes back to AI, you also need a system where some of it is more or changes less often. Your core can change once a year. Your physics can change once a month. Your chemistry needs to change once a week, and your app can change every 3 minutes. And having a layered system where the level of innovation or the change only goes down as far as it needs is the special sauce. And I think too many of these things, there's too much requirement for too much coding, which is essentially recycling the same things. And you need to get a proper ontology that recognizes that there's many similarities to an ISA and a bank account. They're both financial objects, they're stores of value. And so some of these deep concepts need to be baked into the underlying software, which is what I think we've done successfully.
But Dharmesh, the programmability thing is super interesting because I think where we track the code, which is kind of interesting, is I think the level of programmability we can give to business owners across business functions, by the way, like everyday banking and wealth, is I think highly differentiated. But I think especially as we move into an agentic natural language world, it is absolutely critical that you give your customers, your end customers, your consumers and your SMEs, for example, super high levels of configurability themselves, right? If we compare our iPhone home screens together, they look completely different because you have configured yours for your life and Paul and I have configured each of ours for our lives. But if we held up our bank apps, if we were all at the same bank and we held them up side by side, they'd be identical except for the numbers. That's not the future state of banking, right? You have to allow me to personalize my banking experience and you to personalize your banking experience. So that's another dimension of configurability. Third dimension of configurability is bringing third parties into the ecosystem, into the mobile app, like something as simple as loyalty and rewards. And how is Starbucks going to configure a reward for me that's different than a reward for you? So now we're talking about multidimensional configurability, but we've kind of figured that one out.
That sounds really cool. I mean, one of the interesting things that we've recognized. So we built a Hyperjar, our B2C app, and we loaded it with what I consider to be lots of third generation class eating functionality. Social sharing, routing. So I can open a jar up, which I have. I can share it with all of the colleagues in the firm, which I have. They can all spend from my sub account, all 100 of them, but it only works in Brewdog and Lockhouse and Paddington Basin because I don't trust them because they're young and drink too much, right? And so this is a big enunciation of almost a social network for spending, and it's really cool. But it's quite complicated to set up. And we recognize that one of the things that's happening is as you put the power features into an app and make them more and more usable, especially some of these features that people dream about, there's the number of people that use them starts to go down, and you sort of get crammed down. So everyone in our firm understands that. My mum does not use that functionality when she goes on holiday with my nieces and nephews. She doesn't put the social sharing app on when she goes to Italy, right? But one thing which we've seen now is as you start to get conversational interfaces, it turns every user into kind of a power user because it's far easier for my mum when she goes, I'm going to Italy with the kids, what should I do? And the app goes, set up a shared jar, put pocket money in there, make sure it only works in Italy. It all works. So we think there's another blocker that's existed historically on product innovation, certainly in consumer apps, which is just the UX. And I think one of the things which perhaps isn't as well answered as it should be is conversational interfaces make everybody much, much more powerful and better. Just like Rob, who can't use Adobe Photoshop, now can, because it's got an agentic interface, which makes me feel small because it took me ages to learn how to use it, right?
But that's something, Dharmesh, that I think is to add to the content on your show is that I haven't heard. We get it from the banks themselves. They kind of know that while they provide services in their ecosystem today, the minute they allow customers to engage in natural language or agentically, the demand for new products and services is going to skyrocket.
Yeah, I mean, I wish Dave Wallace, who was my co-host, wasn't on holiday this week, but because he would have loved this idea, Rob, that customers can customize their banking service. I mean, I did some work some years ago and came up with this concept of the bank of me. And there is a video on YouTube that kind of portrays this conversational interface and the bank doing way more than, oh, give me my balance. Oh, can you pay this? It was more than that. It was like planning your day, organizing cabs, paying for things as you went along, et cetera, et cetera. And that's, for me, when I did that in 2016, it was deemed quite dystopian. That's not a world I want to live in. You know, it's too intrusive. People were scary. And what's interesting is that 10 years later, I'm showing the same video at conferences. And I asked the question, is this dystopian? Does it scare you? Or is this the world that you would like to live in? And with a couple of years, I guess, of ChatGPT experience, the world has shifted. It's kind of like, I want that now, which wasn't what I got before, right? So in less than 10 years, there's been a big mindset shift in what we're expecting. And so if we think that and see what's available in the market, then there's actually a massive gap that the banks haven't filled yet, right?
The things I bore people with down the pub is banks are obsessed with their own internal products. And historically, they've been fairly slow to recognize environmental change, which is external, right? And the classic example was the disappearance in cash. The banks were sort of sitting around thinking about their own product set, and all of a sudden they woke up and everyone wants to settle money digitally rather than using cash because it's gone. And it's one of the reasons Monzo and Revolut did such a great job sort of cornering the market in spending cards, because the banks haven't really thought about output-based functionality for users because they assumed everyone's taking the money out of the cash point, right? I think there's a risk here today that the same thing happens with this massive change from AI. A lot of the banks are focused on AI inside, like conversation agentic interfaces, and they're not really focused on AI outside, which is the environmental change when everybody starts using their agents and shopping agentically, for example. It's an area which we're very focused on right now.
And we're focused on it from the bank's perspective, Dharmesh. And that's not something we've heard a lot generally, nor have we heard it on your podcast. I mean, where are the banks playing in the agentic economy? And again, we kind of still live in today. And in today, almost everybody has almost all of their money in a real bank account. And therefore, the banks are going to be this last mile of the off in agentic commerce. And while we're hearing about Google protocols and MasterCard protocols and all of this, how and where are the banks going to be participating in the authorization? Because if my agent sends me the wrong pair of Nikes, guess who's giving me my money back? Not Google and not MasterCard. The bank's giving me my money.
Well, the good news is they haven't thought about it much, and we can solve it. Hooray for us.
I mean, so a penny has dropped for me in why you're different. And for me, that sounds extremely exciting, this real configurability that banks have actually been missing. What do you do to kind of make the job of them defining these like highly personalizable, configurable products? Because I can imagine with lots of kind of options that your point and click isn't going to cut it in terms of defining a set of rules.
Well, what's super interesting is you can look at it in different business use cases. A super hot space these days is family banking, right? Everybody wants kids, right? But if you want kids, you're going to want their parents. You're going to want to be able to bank a family ecosystem. You're probably going to want to bring in the grandparents. Now, all of a sudden, you can very rapidly decide what kind of configurability you're needing, right? Because you have chores and you have older kids and younger kids. How are our incentives going to move around birthdays? What about vulnerable elderly parents? All of this stuff starts to light up the business owners of all the things they wanted to do. You could take the same for SME banking. By the way, if you think about family banking, generally mom is the CEO of the household. She's spinning up a bunch of smart accounts. She's wrapping each of them in different conditional rule sets. Well, what does the owner of a small business do? They're the same. It's the same thing. They need an ability, a control center to spin up a bunch of smart configurable accounts, wrapping them in different rules for marketing or VAT or sales or whatever. So this level of configurability, the imagination explodes as soon as you get into the current businesses, family banking, everyday banking. Go back to Convergence for a minute, right? The number one pain point for one of the largest wealth managers in the world, believe it or not, is declines at the ATM. Why? Because at my wealth manager, I don't worry about how much money's in my current account. But if I go to take out money on those rare occasions and I put my wealth management card in the ATM, if I have no money in my current account, it says no. Well, a smart account would say, Dharmesh doesn't have any money in his current account, but does he have any money in his savings account? Does he have any money in a money market fund? Does he have any money in a S&P 500 fund? Give me any reason why I should give Dharmesh his 100 pounds at the ATM, process that in less than a quarter of a second at the point of sale at the ATM, and give Dharmesh his money, and we'll sort it out in the background. These use cases around that level of configurability come to life the minute you start to explore the business use case.
The other thing which has happened to us is we've got a bit of a land and expand model. Quite often someone has a pain point. It's like one or two things they just have to solve. But it's actually quite a lift to actually upgrade the account to a smart account solver. Once you've done it and they've seen how painless the process is, they go, and how about? So I think with a lot of these people, I think this the first thing is to start upgrading the infrastructure, solve some obvious, clear solutions, and then start to dream about where you can take it.
We had this conversation maybe 10 years ago. Some time ago, I built for one of my previous employers, an engagement platform. And this was to drive customer engagement. When I was speccing this out for my dev team, and they're very talented guys, and they were building a rules engine, etc. They said, what are the requirements? And I said, well, the main requirement is that the only constraint about what we can do is somebody's imagination. Like, that's the only thing that's stopping them doing whatever they want to do. That's called a programming language. Was the feedback? And it's like, well, no, but you know where I'm coming from. I just needed to be super flexible.
That's exactly the response which I think one can have. I don't believe that is correct. And I can say this again, building the whole thing from scratch all the way down to the core every time is like building a video game all the way down to the chip every time. There's an awful lot of common language which is sufficiently flexible. It's taken us a long time to learn it. There's a lot of fights between me and our CTO. We're still friends, amazingly, but I just do not think it is the case. It is very easy to componentize, and some of the things that you need to build to make it work have to be threaded through the regulatory stuff, the compliance stuff, the speed, the shardability, the scale. I mean, some of your guests have talked about data structures. You've got to use unstructured data. You cannot put it onto conventional SQL ledgers. These are big decisions on physics. It's not just go program it. Here you go, write some Python. I can tell you, go write some Python is never going to work when you're starting to talk about some of these agentic protocols. It's not going to be robust enough, fast enough, shardable enough to run in real time at point of sale when you're talking about millions and millions of products that need to be checked. It's not going to happen.
But Derek, one of the things we should talk about is while we're very proud of the stuff we do effectively above the line, I own the Morgan Stanley tech stack for a long time. And when a vendor walks in, I knew as we built Hyperlayer, what the answers had to be to the questions, right? And the questions are, well, what if I want you on-prem, right? Or what if I want you across multiple stacks? Or no, you can't ever have my PII, or any of all those other things. But my data is all over the place and there are multiple schemas.
You write some functions in Scala.
Am I going to have to conform to your API framework, right? And most of the time, most vendors give the wrong answers to those questions. So we architected Hyperlayer to always give the right answers to those questions. And from an engineering perspective, that's really hard. So we spent an enormous amount of time making sure we could do this. But yes, we are environment neutral. On-prem in your private cloud, we'll host it across multiple different types of environments. We are data schema neutral, and we can sit across multiple fragmented different data schemes. We are API neutral, right? All of that stuff is there. And I think probably our most differentiated capability, while we're proud of the stuff we do above the line, is 2-3 of the world's largest banks in the world. We're fully in production in way less than 6 months, right? So it's a completely different exercise to the whole core banking thing. Core banking is measured in years. Even most of these kind of experience or rule pricing engine layers we're talking about, they generally count integration in well in excess of 12 months. And so the whole reality for us is to help banks just go fast. And going fast means integrate fast, as well as once we're integrated, spin up products fast.
Fantastic. I mean, I love the whole story. You know, you walked in the customer's shoes and designed a product for the customer that, you know, for the solution that you needed for yourselves, right? What I also love is this kind of evolution of bankers. Sorry, I haven't referred to you as bankers because you have had successful careers in that. In my time when I worked in the bank, and I was a technologist from the outset, I never worked on the business side of things, but we actually had to have middlemen between us and the pure biz bankers in effect to interpret what the technologists were saying to the bank and then vice versa to us so that we understood banking. But it's great that now we can have a conversation and understand each other. I've kind of learned enough about banking, and you certainly have got more than a simple understanding of technology. So that's amazing. And I think it's a great thing for the industry. But I've certainly learned a lot from you guys, and I can definitely see your differentiator, and I'm looking forward to staying in touch and see. I'd love to maybe follow up in the future and discuss anything like an innovative product that your customers are being able to bring to market because they use you rather than somebody else. But for today, we kind of run out of time, which is a real shame because I feel this could go on for quite some time.
We're going to look that up.
Oh yeah, my lunchtime video.
Definitely will do. But for now, I'm going to say goodbye to you guys, but thank you so much for your time, and it's been a really interesting conversation. Thank you.
Great meeting you.
Thanks,
Robert.
Bye.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe, and tune in next time as we take another topic and demystify it.